Welcome back to the Pro Ticker Podcast, your Thursday morning edition, covering major financial magazine headlines. Sometimes it feels like the market is playing this game of tug of war. And today is no exception.
Yeah.
We've got some fascinating push and pull happening with inflation fears and global economic jitters.
Right.
And a crypto market that's decided to throw a party.
Yeah. It's definitely a mixed bag out there.
It is.
And with Trump back in the White House, there's a whole new layer of complexity to factor in.
Absolutely.
Yeah.
So we're going to unpack all of this for you today.
Yeah.
Diving deep into insights from MarketWatch,
Okay.
the Wall Street Journal, Barron's, and CNBC.
Buckle up.
Buckle up. It's going to be a wild ride.
I'm intrigued to see how these different perspectives converge.
Yeah.
There's a lot to unravel here.
There is a lot to unravel.
Yeah.
Let's kick things off with inflation, shall we?
Here.
MarketWatch has a great piece that caught my eye.
Okay.
It seems investors are playing a bit of a head-scratcher. They're shrugging off the latest CPI numbers, which basically met expectations.
Right.
But bond yields are creeping up, suggesting some long-term inflation worries.
I see.
It's like they're saying,
Okay.
yeah, we're fine for now, but we're not so sure about later.
That's a fascinating observation.
Yeah.
Remember, the Consumer Price Index, or CPI, is a key measure of inflation.
Right.
And it's something the Federal Reserve keeps a close eye on. The bond market is often seen as a leading indicator.
Right.
And the rise in the 10-year Treasury yield,
Yeah.
think of it as a barometer for future inflation,
Okay.
suggests investors are anticipating those inflationary aspects of Trump's policies we discussed earlier.
Right.
Things like tariffs, which could drive up prices.
Exactly.
Makes you wonder,
Yeah.
is the market underestimating the potential impact?
And speaking of the Fed, Barron's has an article all about Fed Chair Powell's upcoming speech.
Oh, right.
Everyone's on the edge of their seats waiting for hints about future interest rate decisions. Will they cut rates in December, as many anticipate?
Yeah.
Or would they hold steady, perhaps concerned about inflation bubbling up?
Powell has always stressed a data-dependent approach.
Right.
So it's a real nail-biter.
It is.
He's got this intricate balancing act ahead of him, keeping inflation in check without slamming the brakes on economic growth.
Right.
What's particularly interesting is that this all plays out against a backdrop of global economic uncertainty.
Which brings us perfectly to our next stop, the Eurozone. The Wall Street Journal paints a somewhat gloomy picture,
Okay.
reporting that industrial output has fallen for the second month in a row.
Yeah.
Weak demand, high interest rates, and potential trade spats with the U.S. are all adding fuel to the fire.
And let's not forget the lingering shadow of Brexit,
Right.
adding another layer of complexity.
Yeah.
The Wall Street Journal even quotes Alliance Trade,
Uh,
a global credit insurer,
okay.
which estimates that if the U.S. slaps a 10% tariff on European goods, it could wipe out billions of dollars in exports
Yeah.
for key players like Germany, the Netherlands, France, and Ireland.
Right.
The interconnectedness of global trade is on full display here.
It's a stark reminder that what happens on one side of the world can send shockwaves across the globe.
Totally.
But hey, let's take a break from the doom and gloom for a moment, shall we?
Sure.
Because guess who's back and bolder than ever?
Oh, who?
Bitcoin.
The prodigal cryptocurrency returns.
It does.
It certainly has been a roller coaster ride for Bitcoin, hasn't it?
The Wall Street Journal has dubbed it a crypto renaissance.
Wow.
And with Bitcoin smashing through the $90,000 ceiling, it's hard to argue.
Yeah.
The article highlights a perfect storm of factors driving this surge.
Yeah.
Trump's surprisingly pro-crypto stance.
Okay.
A wave of new Bitcoin ETFs making it easier than ever to invest.
Right.
And let's not forget the Fed's easing monetary policy.
And remember that psychological factor.
Oh, yeah.
After the crypto crash of 2022, people were understandably skittish.
Right.
But this rally has rekindled that fear of missing out.
Absolutely.
The Wall Street Journal article mentions BlackRock's iShares Bitcoin Trust becoming the world's largest Bitcoin fund,
Wow.
with a whopping $42 billion in assets.
That's a lot.
That kind of institutional money pouring in sends a powerful signal, doesn't it?
It does.
Yeah.
It's like everyone's suddenly remembering that old adage, what goes down must come up.
Right.
But, of course, as with any investment, caution is key,
Of course.
especially in the notoriously volatile crypto world.
Absolutely.
Speaking of changing tides, let's shift gears to another fascinating story from the Wall Street Journal.
Okay.
This one takes us to Hong Kong, where a subtle but significant power shift is underway.
Interesting.
It's a story about China's growing influence in Hong Kong's financial hub,
Okay.
and the West seemingly taking a back seat.
It's a nuanced topic,
It is.
but one with potentially far-reaching consequences.
It is.
The article dives deep into how Chinese banks and businesses are increasingly calling the shots in Hong Kong.
Yeah. Filling the void left by some Western institutions.
The article doesn't just talk numbers, though.
Right.
It paints a vivid picture with anecdotes about Mandarin-only speeches at the stock exchange
Huh.
and Chinese businessmen crowding once Western-dominated bars.
It's a symbolic shift, for sure,
Yeah,
but one that reflects a broader trend.
it does.
The question is, how will this impact Hong Kong's status as a global financial center?
Right.
Will it retain its appeal, or will concerns about transparency and risk-taking dampen its allure?
It's a fascinating question, but before we dive deeper into that,
Sure.
let's pause for a moment and bring you, our listener, into the conversation.
Okay.
What's caught your attention so far?
Yeah.
What are you most curious about?
I'm curious to hear what our listeners think.
Me too.
Yeah. It's fascinating how interconnected these seemingly disparate stories are, isn't it?
It is.
We've got inflation fears in the U.S.,
Yeah.
economic weakness in the Eurozone, a surging crypto market, and a power shift happening in Hong Kong.
It's a reminder that we're living in this globalized world
Yeah.
where events in one corner
Yeah.
can have ripple effects across the planet.
Absolutely. And speaking of ripple effects, let's circle back to the U.S. market's reaction
Okay.
to that latest inflation data from MarketWatch.
Right.
Remember how investors seem to shrug off the CPI numbers?
Yeah.
Well, the 10-year Treasury yield tells a different story. It's been declining since the election,
Oh, wow.
even though the Fed is expected to cut rates in December.
It's a bit of a head scratcher at first glance, isn't it?
It is.
But it highlights a crucial point.
Okay.
The bond market often acts as a leading indicator, a
Right.
sort of canary in the coal mine for future inflation.
I see.
So while the stock market might be feeling optimistic right now,
Right.
those rising bond yields suggest investors are wary
Okay.
of the potential inflationary pressures brewing beneath the surface.
And remember, the MarketWatch article quotes an analyst who points out that future inflation has become top of mind since Trump's victory.
Interesting.
It's as if the market is starting to wake up to the fact that those tariffs
Right.
and potential tax cuts, while perhaps stimulating in the short term,
Yeah.
could have some unintended consequences down the road.
It's like a balancing act, isn't it?
Yeah, it is.
Trump wants to boost the economy and put America first,
Right.
but those policies could also fuel inflation, which could then force the Fed's hand.
Exactly.
The Barron's article about Powell's upcoming speech highlights this tightrope walk. He needs to acknowledge the recent easing of inflation,
Right.
but also signal that the Fed is ready to act if things start to heat up again.
It's almost as if the market is daring Powell to make a wrong move,
Yeah.
and the whole thing could teeter on the edge. But, speaking of tricky situations, we can't forget about the Eurozone.
Right.
That Wall Street Journal article really paints a bleak picture.
Does it?
With weak demand, high interest rates, and those looming U.S. tariffs creating a perfect storm.
It's a bit like they're caught between a rock and a hard place, isn't it?
It is.
They're grappling with internal challenges like high unemployment and sluggish growth.
Right.
And then they have these external pressures from the U.S. and potentially even from a post-Brexit UK.
The Wall Street Journal does a great job of putting those potential tariff impacts into perspective.
Oh, good.
They quote those figures from Alliance Trade,
Yeah.
estimating that a 10% tariff hike could wipe out billions of dollars in exports.
Wow.
For major European economies, that's a significant hit,
Yeah.
especially for an area already struggling to gain economic traction.
And it really underscores how intertwined the global economy is, doesn't it?
It
A
does.
policy decision in Washington can send shockwaves across the Atlantic,
Yeah?
impacting businesses and livelihoods far beyond U.S. borders.
Right.
It makes you realize that we're all in this together,
Yeah.
for better or worse.
Absolutely. And speaking of global interconnectedness, let's turn our attention to the oil market.
Okay.
CNBC has an interesting article
Uh-huh.
about how OPEC,
Oh,
the Organization of the Petroleum Exporting Countries, has lowered its demand forecast for both 2024 and 2025.
They're pointing to slowing growth in key markets like China and India as the culprits.
Yeah.
That reduced demand is putting downward pressure on oil prices.
Right.
And we saw Brent crude dip below $72 a barrel this week.
But here's where things get really interesting.
Okay.
Remember those geopolitical risks we talked about earlier?
Yeah.
Well, CNBC reminds us that potential disruptions to oil supply from Iran
Right.
could send prices skyrocketing.
Oh, wow.
What a classic case of supply and demand,
Mm-hmm.
with a hefty dose of political intrigue thrown in for good measure.
And with Rubio as Secretary of State,
Right.
a hardline stance on Iran seems almost inevitable.
Yeah.
That could mean stricter sanctions,
Right.
which could in turn squeeze Iranian oil exports.
Mm-hmm.
It creates a situation where we have these competing forces,
Uh-huh.
lower demand pulling prices down, and potential supply disruptions pushing them up.
Right.
It's a real tug of war.
It is.
And it's anyone's guess which side will win out.
It's enough to make you want to grab some popcorn and watch the drama unfold.
Yeah.
But, speaking of dramatic comebacks, we can't leave out Bitcoin.
Oh, right.
That Wall Street Journal article about the crypto renaissance really captures the excitement in the air.
It's hard not to get caught up in the hype, isn't it?
It's not.
Bitcoin soaring past $90,000 is a powerful image.
It is.
And it's reignited that belief in crypto's potential.
And the Wall Street Journal does a great job of breaking down the factors behind this surge.
Sure.
They highlight Trump's surprisingly pro-crypto stance,
Yeah.
the influx of new ETFs that make it easier for everyday investors to jump in, and the Fed's easing monetary policy, which is creating a more favorable environment for riskier assets.
It's like all the stars aligned for Bitcoin.
Yeah.
And it's created a sense of euphoria in the crypto community.
Right.
The article mentions that BlackRock's iShares Bitcoin Trust has become the world's largest Bitcoin fund,
Wow.
with a staggering $42 billion in assets. That's a clear sign that institutional investors are taking crypto seriously.
Right.
And that's got everyone buzzing.
It's definitely exciting, and it's hard not to get caught up in the frenzy.
Yeah.
But let's be realistic for a moment.
Okay.
The crypto market is notoriously volatile. What goes up can come crashing down just as quickly.
Right.
Remember the crypto crash of 2022?
Oh, yeah.
It's a cautionary tale.
No, it is.
That reminds us to approach crypto with a healthy dose of skepticism
Right.
and never invest more than we can afford to lose.
You're absolutely right. It's easy to get swept up in the excitement.
Mm-hmm.
But it's important to remember that crypto is still a relatively new and untested asset class.
Yeah.
There are risks involved, and it's crucial to approach it with a level head.
Well said. Now, before we wrap things up,
Sure.
I want to circle back to that fascinating Wall Street Journal article about China's growing influence in Hong Kong's financial hub.
Right.
It's a nuanced topic,
It is.
but one with potentially significant implications
Yes.
for the future of global finance.
It's a story that's been unfolding for a while now,
Uh-huh.
but it seems to be gaining momentum.
Right.
Chinese banks and businesses are increasingly flexing their muscles in Hong Kong,
Yeah.
filling a void left by retreating Western institutions.
And as the article points out, it's not just about the money.
Right.
It's about a shift in culture
Uh-huh.
and a sense that the balance of power is tilting eastward.
The article uses some vivid imagery to bring this shift to life.
It does.
Remember the anecdote about the Mandarin-only speech at the stock exchange?
Yeah.
Or the observation about Chinese businessmen favoring whiskey at a once Western-dominated bar?
It's a subtle but powerful way of illustrating how the landscape is changing.
It's a reminder that globalization is a two-way street.
Yeah.
And the rise of China as an economic powerhouse is having a profound impact. On global finance, the question is, how will this shift play out in the long run?
That is the question.
Will Hong Kong retain its status as a global financial center?
Right.
Or will it become more closely integrated with mainland China?
It's a question worth pondering, but before we delve deeper into that,
Okay.
let's take a moment to bring you, our listener,
Mm-hmm.
back into the conversation.
Sure.
What are your thoughts on this?
Yeah.
What stands out to you as most significant in this changing financial landscape?
It's remarkable how all these seemingly separate stories we've discussed today, from inflation jitters to Bitcoin's resurgence, all paint a picture of a financial world in flux.
Yeah.
It's a world where traditional power structures are being challenged.
Yeah.
New technologies are disrupting the status quo, and the interconnectedness of the global economy is more evident than ever.
Yeah. It's a lot to wrap your head around, that's for sure.
It is.
We've covered inflation, the Fed's balancing act,
Mm.
the Eurozone's economic woes,
Mm.
the oil market's volatility. Bitcoin's wild ride, and the shifting sands of global finance.
But here's the thing.
Okay.
Understanding these trends isn't just about keeping up with the headlines.
Right.
It's about empowering yourself to make informed decisions.
Yep.
Whether you're an investor trying to navigate the market's twists and turns, a business owner making strategic decisions in a rapidly changing world,
Right.
or simply someone trying to make sense of the forces shaping your financial future.
Yeah.
Knowledge is key.
So let's bring it back to you, our listener.
Okay.
How do these trends we've discussed today resonate with your own financial journey?
Yeah.
What are the key takeaways you'll be pondering as you go about your day?
Perhaps you're thinking about how the potential for rising inflation might impact your savings goals.
Right.
Or maybe you're wondering how the Eurozone's economic weakness might affect your business if you have exposure to European markets.
Yeah.
Or perhaps you're intrigued by the rise of China as a financial powerhouse and what it means for the global balance of power.
These are complex questions, and there are no easy answers.
That's true.
But by engaging in this deep dive with us, you've gained valuable insights into the forces shaping the financial world. And that's a powerful tool to have in your arsenal.
Remember, the financial landscape is constantly evolving.
It is.
What seems like a sure thing one day can change dramatically the next.
That's true.
But by staying informed, being adaptable, and always being willing to learn and adjust your strategies, you can navigate these turbulent waters and emerge stronger on the other side.
And on that note, we'll see you all tomorrow morning with fresh insights from the latest financial magazine headlines.